Good afternoon, traders. I'm Michael Sabo here with RJO Futures on Friday, February 15th with some afternoon commentary here in the energy market. So let's get started here. What do we have going on here today? Well, energy prices, as you see here, taking a look at that April crude oil contract, a much weaker tone here today. We had options expiration yesterday in the March oil options, and today crude prices pulling back here quite a bit. So first I want to talk about Wednesday's EIA report here, taking a look at that. Traders were looking to see another pretty substantial build there in the neighborhood of around 2.5 million barrels, and actually came in quite a bit smaller, only a build of about 560,000 barrels here, but nonetheless still a build. And I think the big thing, the important thing to note there is, let's take a look at the stockpiles year-over-year levels, 5-year average. We take a look at year-over-year numbers there. We're looking at stockpiles of around about a little over 33 million barrels here from this time this year versus last year, so certainly up there. Taking a look at the 5-year average, over 37 million barrels more. And if we take a look at our total crude stocks right now, this particular week here, the largest ever on record, coming in at around about 372 million barrels. So what that's telling us here, at least telling me, is that the oil market does appear to be very well supplied here. And we've been continuing to see that the reoccurring theme of builds in stockpiles. Now, if we take a look at the demand side of things here, we just had some poor economic data coming out of Europe, and that's kind of what's helping pull the oil market down here today. In addition to that, if you take a look at the technicals around the 98.50 area, we've got nice double topping in action. So today, at one point here, we did see crude off over $2 a barrel. Currently this afternoon, we're only off about $1.50 a barrel, but I think we do have a weaker tone there. I think you've got strong fundamentals pointing to lower prices. I think you've got strong technicals also pointing to lower prices here in the short term, targeting around that the 92.50 area, which is the 200-day moving average. So I think we could look to see if prices continue to close weak here on this Friday. Remember, Monday is a holiday here, so we'll come in with a shortened trading week here. But if we come in with a little bit of a weaker tone starting here Tuesday, we could be in store for seeing a little bit more of a pullback. If you're long in the market right now, be cautious. I think you should certainly be using some strong risk management strategies up here, possibly taking a little bit off the table. If you're short on this market here, again, be cautious, because we've seen these prices correct and take back off to the upside. But I think that you could see the longs start to get pressed as we go into next week. So give me a call, shoot me an email, talk to you a little bit more in detail here. The number to the trade desk is there on the screen, my email address there on the screen. Of course, remember that futures trading does involve a substantial amount of risk, may not be suitable for all traders. Good luck and good trading.